a good accountant, I think, can make or break your business. And that's why episode 217 is about what you should be getting every month from your accountant. Hello, it's Emma Mills here, and welcome to episode 217 of My TV, where this week I'm going to talk about one of the most important things you need to get right in your business. Now, I think nearly every episode that I don't like maths, and so that's even more so for me, that what I need backing me up every month of the year is a really, really good accountant. And today's episode is about the 5 things I think you need to make sure that you get or is happening as a non-negotiable with your accountant. And for some of you, you might be switching off already because you're like, I'm sorted, I know I'm great, I know what I'm getting from my accountant, it's all good. But I know there are just so many business owners who actually don't even know what profit they are making this month, next month, until the end of the year. And by that point, as we all know, it is way too late. And so it's just crucial. It's like a complete game changer for you to have. You know, it's like driving a car without a dashboard. It's impossible. So I've got my 5 things you definitely need to get from a new accountant or talk to your existing one about. Point number 1, simple but basic. If you only communicate with your accountant once a year, it has to stop right now. Like, I can't think of a situation as a business owner where this flies, having that. I mean, unless potentially you're a contractor of some description and you are billing just the same amount and you don't really have any outgoings and it's just a one-on-one contracts. Like, I can't see any other situation where this is going to be beneficial to you. So if you only have contact with them at the end of the tax year and it's a struggle or a quick rush to get everything to them, or they're doing it all in one go, it needs to stop right now. Like, you need to speak to your accountant about it. Once a year doesn't work. So if once a month doesn't work, you might ask, well, how often should I speak to my accountant? Without, like, non-negotiable, every single month you need reporting from your accountant. And this shouldn't be a big upheaval of things to get over to them because of the wonders of things like Xero and QuickBooks. But without the knowledge of, you know, I speak to business owners who they don't really know. Well, they don't know how much profit they've made. They don't know how much they've spent, and they know it kind of works out, or they know that some months they have a bit of a shock and it kind of hasn't worked out. But without the actual reports, you are completely powerless to change the hinges that swing the big doors, to make the adjustments that are the 1% that mean that more money drops to the bottom line so that you have a better life. So management accounts, and before you switch off because you think, wow, well, this sounds expensive, it absolutely is not expensive. And whilst I think when I first started that with my accountant back in the day, maybe I was paying them like $200, $250 a month. I know there are accountants that will do monthly for less. I know there are some that will charge more, but £300 is like a price point where you know that you're going to get some monthly accounts. And I don't want to like caveat the price on it, because you pay for what you get. I'm a big believer in that. So this is not like if your accountant's more than that or cheaper than that. I pay my accountant more than that right now, but it is so important to get monthly management accounts where you can see exactly what has happened. And if you are not a trained bookkeeper, you need to get somebody else to do that, and you need to allocate the funds within your business to make it a priority to get it done. Whether you're taking that money from somewhere else, whether you're paying yourself a tiny bit less, the upside of getting a proper accountant to do your monthly management accounts is just a non-negotiable. So that is number 2. You need monthly management accounts dropping into your inbox to look, review, and improve on. Number 3, slightly more advanced than 1 and 2, but for me, inside your management report, which will happen in most of them, is for you to understand and get a grasp on the cost of sale in your business. So the very layman's term description of this, which is like the one I understand it with, is that your service or your product has a cost to deliver it. So in my business, my cost of sale is my people. So I cannot deliver PA support or call answering without having people sat in seats, loving what they do, delivering the job. So their salaries are our cost of sale. So for every £100 of PA support, for example, that we sell, it costs X of salary to deliver that £100. So let's say, let's just for easy maths, that our cost of sale, that it is 50%, that it costs £50 for every £100 of PA support that we deliver. I work to, for example, this 50% to know that we keep our cost of sale at the same rate all of the time. And clearly, the more that we can raise how much we turn over, the revenue for the cost of, and keep the cost of sale the same, all of this additional money drops into the bottom of the pot to pay rent, to have marketing, to be left over as profit. So the ratio between whatever you sell, so let's say for example you sell dog treats and it costs you £5 per dog treat and you sell them for £10, you have £5 left in that to do your marketing, to update your website, to pay for a VA, to pay your rent, to pay yourself, to get some profit left out of it. So clearly the more you can reduce that cost of sale or increase what you charge it for is a really, really important metric, which has only properly clicked for me over the past 12 months. But having that cost of sale percentage as a target that you're aiming for every month to keep the same and to raise what the actual revenue that you get from it has catastrophically amazing effects to the rest of the business and what you have left to pay for things, pay yourself, and have profit left over. So really digging into what your cost of sale is. If you're a digital marketing company and it costs you actually in staff hours £2,000 to deliver a website and you're charging them for £5, the more that you can play and understand and tweak these numbers, the bigger effect it has on you having the business you want and the life that you want. So cost of sale, put this on your to-do list this year to understand it properly and understand what it is in your business. Number 4, operating cash flow statement. So every month you're going to get your management, you're going to speak to your accountant, we're going to get management accounts sorted, and as part of these management accounts you need to see your operating cash flow statement. I'm going to show you what an example of this looks like, but ultimately it is like the key document. Again, it's been a big epiphany for me over the last 12 to 18 months of what the statement actually means. And my simple layman's explanation for you is that profit and loss, which people focus on really, really a lot. I used to back in the day, and it'd be like, okay, we've made so much profit, amazing. But actually a profit and loss can be a bit of a make-believe document. You know, you can, for example, at the top of a profit and loss, the revenue that's come in, if you haven't been paid every single penny of that revenue that's come in, the amount at the bottom, which is profit or loss, well, particularly the profit, doesn't exist because it isn't in your account. The spend that you have in there, I mean, there are things that you can put in there that you have bought but don't go in there. So like depreciating assets, for example, like desks, IT equipment, it most probably won't factor in your profit and loss because it goes onto the balance sheet. So even though it's showing, say for example, you've made a £5 profit, if you've spent £5 on office furniture or IT equipment that's not showing in the profit and loss, you actually haven't got a £5 profit, but it's showing elsewhere. So profit and loss can actually be, I'm sure you already know that you can do stuff to make you look way more profitable, or if you don't want to make a profit, you can put stuff in there that you can completely manipulate what a profit and loss looks like. The cash flow statement, on the other hand, there is no manipulation of, like it is a shot in the arm of how much money you have received in over the course of the month, year, whatever period you're looking over, and how much you've spent out, and it shows you actually what that gap is, whether it's positive or negative. So the cash flow statement is the explainer document of why, when it comes to the end of the month and there's no money to pay wages, or why there isn't enough money to pay the VAT, or why there isn't enough money to pay yourself. The cash flow statement actually, and basically, if it is not positive every month, you are heading towards some kind of issue, because if you are negative every month on the cash flow statement, unless you've got a big reserve pot, somebody funding you money, the money isn't going to, well, the money is running out very, very rapidly. So profit and loss is like, okay, fine, you need that management accounts, but the key part of the monthly management accounts that you need is your operating cash flow statement. It is 100% a non-negotiable, and it should be the first page, and it's super, super illuminating, open your eyes to actually the health of what is going on in why you can't afford to pay bills, why you can't afford to pay the staff, why you are having sleepless nights. Make sure you speak to your accountant today, and if you don't have it already, make sure they send it to you or they show you where to see it in Xero, QuickBooks, whatever it is that you're using. Really, really important, number 4. And number 5, to add to the list of the email that I know you're going to send your accountant straight after this episode, is a cash flow forecast. I highly recommend you do not do this yourself unless you are, again, an accountant or a bookkeeper. I know there is software out there like Float, and I'm not going to pretend to remember the rest of them, but there's software that connects into your Xero, into your QuickBooks. In my experience, in speaking to other accountants, none of them actually give you a very clear picture of what cash flow is going to look like. There's loads of things they don't take into account. They can easily go wrong. They can easily be manipulated so that they're not right. Your accountant should be providing you with a cash flow forecast. They can easily do it with the information they have, and key part, if you have a budget for this year, so if you have a 12-month plan of what you want to turn over and what your spend is, they can create a budget from that, predicting cash flow forecast. So add this onto the email you're about to send. A cash flow forecast emailed through to you every month. I get it. You should be able to get it too. And the big, I think, alarm bell that you have got a problem with the accountant that you are using right now is if they drop on you that you owe tax next week and you did not know. So whether they go, oh, by the way, you've got to pay 10 grand of corporation tax next week. By the way, your VAT is due today, which I've had in the past. Your VAT is due today. Sorry, you needed to pay them whatever, 15 grand. Oh, we're about to submit it. There's like an hour to go. I've had this in the past. Like, this is a massive red flag that if you do not in advance, because there is no reason why you should not know in advance what is coming up with your VAT, with your corporation tax, and with your own self-assessment. Like, if these are last minute things dropped on you that you are not prepared for, panicking about, and another thing on top of running a business to give you a sleepless night, need to can them right now. That is like the non-negotiable. So I hope my 5 points plus my preparation for tax gives you some visibility on actually what you should be getting from your accountant. If you don't, please go and speak to them. Now, it may well be that they just haven't given it to you just because you've not had the conversation with them, and they may be like, absolutely, I can get that sorted for you, no problem. Definitely have the conversation. And if you want some recommendations on accountants to go to, then probably just pop them on the end of this episode, or hit me up, send me a reply, comment on this, and I can give you a couple of amazing recommendations for accountants that I know are super smart, switched on, and will help you get your head out of the dirt, into the clouds. And I'm going to see you next week. See you later. Bye-bye.